Alright, so you probably heard someone online say, I just made $500 trading options, and you're like, what the heck is an option, and how do I get in on that? Let's break it down, and no boring finance talk, I promise. What is an option? Think of an option like a movie ticket. You buy the ticket today for $12 to see Avengers 23, next Friday that ticket give you the right to watch the movie at a specific time and price. But if you get busy and skip the movie, the ticket just expires. You lose your $12 but nothing else happens. That's what an option is like in the stock market. It's a contract you buy that gives you the right to buy or sell a stock at a specific price by a certain time. But just like that movie ticket, if you don't use it, it just expires. There are two types of options. A call option is when you think the stock's gonna go up. And a put option is when you think the stock's gonna go down. Remember it this way: call it up and put it down. Let's say a stock, we'll call it stock X, is selling at $50 right now. You think it's gonna shoot up to $60 next week. So, you buy a call option that lets you buy stock X at $50, no matter what the price becomes. Now, you really don't have to pay $50 to hold that stock. You pay a premium for the option at $2 to hold that stock. Each option contract is 100 shares of a stock, so the premium you pay is $200. 100 shares times $2. If the stock goes up to $60, your option is worth $10 per share. Since you paid $2 per share, you made an $8 profit per share. Boom, that's $800 in profit. But if the stock does not go up and stays at $50, your option expires worthless and you lose $200. That's the worst that can happen. But what if you think it's gonna drop? Now say you think stock X is about to crash. You buy a put option, which lets you sell stock X at today's price of $50, even if it drops. If stock X falls to $40, your put option just made $10 per share. This time, you're making money off the drop. So, with options, you can win when the stock goes up or down, as long as you guess right. So, why do people trade options? Low cost. You don't need thousands of dollars to trade options. A couple $100 can control a $5,000 stock position. High reward. Small moves in the stock equal big moves in the option's value. Limited risk. You can only lose what you put in. You can bet on stocks going up, down, or staying flat. But here's the catch: you have to be right and fast. Options expire on a set date. So if the stock moves in your direction after the option expires, you still lose money. You can lose 100% of your investment if you're wrong. Options are like spicy ramen. Tasty if you know what you're doing, but dangerous if you don't. Here are some smart tips before you start. Start small, like $50 to $100 small. Use a paper trading app first. No real money, just practice. Don't go YOLOing your rent money into options. Learn the lingo. Strike price, premium, expiration. Know what those things mean? Use options to learn, not to gamble. So, yeah, options are like powered tools for the stock market. They can build some serious gains or cut a hole in your wallet. Start slow, keep learning, and don't let hype be your strategy. Smash that like button, hit subscribe, and comment if you want more information like this.